Good morning. It's 10 a.m. on Tuesday, September 29th, 2020, and this is 10 on Tuesdays. Most of the questions I receive from people are related to some sort of basic elements of sales and use tax. So today we're going to be getting back to the sales tax basics. I'm Holly Hoffman, founding partner and CEO of the Sales and Income Tax Advisory Network. Prior to creating my company, I worked for the Wisconsin Department of Revenue as an auditor, speaker, and sales tax specialist. My passion is to help provide sales tax education and support to tax professionals, businesses, and associations with the goal of building a network of empowered taxpayers. For more information, visit salesandincometax.com. Thank you for joining my web chats 10 on Tuesdays, every Tuesday from 10 to 10:30 a.m. You can check out previous episodes on my 10 on Tuesdays channel. To find my channel, go to salesandincometax.com, look for the 10 on Tuesdays logo. You can click on that logo to register or watch previous episodes. Click on watch previous episodes to access the 10 on Tuesdays channel. Well, I was thinking about what topic to discuss today. I started thinking about what types of questions people come to me with. And the most common questions don't sound basic, but the answers are rooted in one of three things. Either definitions, basic definitions of sales and use, the measure of tax, or the location of the sale. So questions like, is this taxable? Whether or not it's taxable may not be the issue. You may need to first look at whether the transaction is considered a sale. If I'm in the business of providing ABC service and I list XYZ service separately on the invoice, am I supposed to charge tax on that separate service? To answer this, you need to understand what's included or excluded from the sales price. So you have to understand more about definition of sales and purchase price. Another question someone might ask is, they receive goods in Wisconsin from a New York vendor. The New York vendor charges New York sales tax. Do they owe Wisconsin tax? Well, that you need to understand sourcing or the location of the sale. So we're going to talk about that today too. But these are basic but very important parts of sales and use tax, and a lot of the decisions on taxability of transaction really is rooted in these items. So starting with tax definitions, let's first go back to the simple. What is sales tax? What is use tax? How is it defined in Wisconsin? So the Wisconsin sales tax is a 5% tax. That's just the state tax imposed on the sales price of retailers making taxable retail sales in Wisconsin. And retail sale includes leases, licenses, and rentals. The sales tax applies to retail sales, but not sales for resale. And the Wisconsin sales tax is imposed on the seller. And the law allows tax to be collected by the seller from the purchaser. So that is why we pass it on to the purchaser. But technically it's imposed for sales tax, it's imposed on the seller. Use tax is the counterpart to sales tax. Every state that has a sales tax has a use tax, and that's because if you didn't, people would be going outside the state to avoid sales tax and purchasing goods and bringing them into Wisconsin, and that would create an uneven playing field. So we have a use tax. The Wisconsin use tax is a 5% tax imposed on the purchase price. So on sales tax, we talked about sales price. Use tax, we talk about purchase price of taxable products or taxable services that are stored, used, or consumed. So sales tax is imposed on retail sales. Use tax is imposed on products or taxable services that are stored, used, or consumed within Wisconsin, and upon which a Wisconsin sales or use tax has not previously been paid. So if you paid sales tax to your seller, of course you don't owe use tax. But if you go over to Minnesota, Minnesota has different sales and use tax laws than Wisconsin. Minnesota doesn't tax clothing, for instance. So if you go to Mall of America, you purchase clothing, you bring it back into Wisconsin, you now owe use tax, Wisconsin use tax, because you stored, used, or consumed that clothing in Wisconsin. And since Minnesota doesn't tax clothing, there would not be any credit or offset for tax previously paid. Wisconsin does allow credit for tax paid to another state if it was properly paid. So if tax was first due in another state on the item that you then bring into Wisconsin, then you would get a credit for what was paid in another state. Most states are equal to or have a higher sales tax rate than Wisconsin. But again, you have to be careful because both Minnesota and Illinois do not charge tax on labor. Like I gave the example of clothing, Minnesota doesn't tax clothing. So you have to be careful what you're bringing in. And nowadays, a lot of purchases are made online. One of the biggest things for businesses specifically is software purchases online. That's where stored, used, or consumed within Wisconsin. That's where a lot of businesses take a hit. Again, use tax is imposed on the purchaser. If you are under audit, an auditor, depending on who they're auditing, they're going to look at both sales and purchases of every business or individual that they audit. So if you make sales, they're going to look at imposing sales tax if you didn't properly collect it. On all your purchases, they're going to look to make sure that you remitted use tax if you didn't properly pay sales tax to the seller. So this is the whole sales and use tax. Wisconsin has a transactional tax. That means that each transaction you could look at for taxability. That's why there's sales and use. And each item in the transaction is a transaction. So every time you purchase something, that's a transaction. Then if you turn around and sell that item, that's a new transaction. So you have to look at the taxability of each situation. It's not always just because I purchased something means everything I do after that is non-taxable because you already had one transaction. That's not how it works. So backing up, we're going to get into sales price and purchase price, but I want to back up just a little bit. Sale is specifically defined in the statutes, and I know people don't like referring back to the law because they feel it's confusing or there's too much information, but honestly, these definitions at the beginning of section 7751 are so good and help so much. So sometimes I really think people need to actually look at it and not be afraid. Just forget that it's in the statutes, it's the law. Just look at it as a dictionary and a roadmap of looking for their information of whether or not their transaction, their situation is described in here. A lot of this information in the definitions is not real complicated. It's pretty plain language to an extent. So section 7751.14 defines sale. Sale includes a transfer of the ownership of, title to, possession of, or enjoyment of tangible personal property or items, property, or digital goods or services for use or consumption. And sales price is defined. It's the total amount of consideration. Consideration includes cash, credit, property, services, whether it's received in money or otherwise. So some people get thrown off because they think there's no cash transferred. You know, the statutes describe even if it's just an exchange of consideration on your books and accounts payable, accounts receivable adjustment, liability in your books, that is considered consideration. For example, say I purchase a car with my daughter to help her out. So we're both on that loan. The title is in both our names because we're both on the loan. At some point, she's doing well and she's going to take over payments. She's always made the payments on the car. It's really her car. So originally, sales tax was paid to the dealership on the purchase of that car, right? So then when I want to get off the title and I transfer that to her, that is actually considered another sale. They're considering if both of us were on that loan, if both of us were listed on that loan and she takes over the whole loan and we transfer the title out of my name, so she basically takes true ownership, that is considered under the tax law a sale. Now, of course, it wouldn't be taxable because it's mother-daughter. Yeah, we got all the exceptions. I was trying to think of a situation, but so even a situation like that where it could be something else. I have a piece of equipment. I'm a business. I'm selling a piece of equipment. We have a loan for the equipment. I just need to get rid of it. I sell it. Maybe it's a related company, but a separate entity. And I say, hey, you know, that company just takes over the loan payments and we transfer that piece of equipment to that company. So that is also a sale. Even though they're just taking over the loan, that is considered consideration. I received a release of debt in exchange for the sale of the equipment. So this is where it comes back to looking at the definitions of what is or is not a sale. And not only does the statutes lay out what is a sale, what's included in sales price, it lays out what's excluded, what's not considered a sale. So for instance, there's certain situations, certain business arrangements where it would not be considered a sale, transfer of property to a corporation solely in consideration for issuance of its stock. That would not be considered a sale. There's certain other intra-company type situations, distributions and such. An entire liquidation to its members of a limited liability company would not be considered a sale. So there are certain things, certain situations that are excluded. Repossession of property is not considered a sale. Things like that. So really looking at that, sometimes that's what, you know, I feel like when people ask me what seems to be a simple question, and then I ask a million questions to them about the situation, and they're kind of like, why does that matter? You have to set up the whole situation. So the next issue becomes measure of tax. Measure of tax is the amount upon which sales or use tax is imposed. Measure of tax is actually that sales and purchase price that we talked about in what the sales tax is imposed on. The sales and use tax is imposed on the sales price or the purchase price. Sales and purchase price are the same thing. It's one and the same. It depends on which side of the transaction you're on, but it's the same amount of measure. If an item is subject to tax, certain charges related to that item are also subject to tax, meaning it's included in that sales and purchase price. Or certain things related to that item are not subject to tax and are specifically excluded from the sales and purchase price. So when you sell a taxable product or service, other items on that invoice or may not be on that invoice, but related to that sale, specifically tied to that sale, may not be subject to tax. They may be included in the purchase price or excluded from that purchase price. And the definition of the sales price is listed in section 775115B of WSSTATS, and it gives a lot more detailed description of what's included and excluded from sales or purchase price. So some of the common things, if the item you're selling is taxable, the taxable amount, the sales price, the measure of tax includes the retail price of the product or service. So that's your selling price of that product or service. So it's the cost of materials or the cost of goods sold plus your markup. Cost of materials used, labor or service costs, and transportation to the seller, all your costs that went into that, plus any markup, plus any labor necessary to provide the sale. So that's the first two items. So the taxable amount includes retail price of the product or service. The service might include cost of materials used, labor or service costs, transportation to the seller. Certain taxes imposed on the seller, and there are certain exceptions, but if you're doing say service to a furnace, it's a taxable service, and you had to have some fabricating done of some materials that went into the furnace. Oh, I'm gonna think, hang on. Let me think this way. You have a service shop, you have a line item that says shop materials. That's rags, different things you have in the shop. They aren't necessarily resold because they aren't passed on to your customer, but you list them to recoup your costs on your invoice to your customer. On those purchases of those rags and other items in your shop, you pay tax. So that tax included in that service charge, that's a sales tax you paid on those rags. It's imposed on you. It's still that fee, that shop supplies fee on your invoice is still considered part of the sales price, the taxable sales price. So a taxable amount includes taxes imposed on the seller. You would not list those out separately, but that's just an example. Services necessary to complete the sale. So if you're selling an item and it has to be shipped to your customer and you're charging a delivery charge for that item to be shipped to the customer, that's a service necessary to complete the sale. If you are IT professional and you sell equipment and installation is necessary to complete the sale because you have to do the setup, that's additional service necessary to complete the sale. Installation is a common one. So any services necessary to complete the sale. One that would be included in here is consulting. Not all consulting services are taxable, most are not. But if it's a consulting service that is necessary to complete the sale, that's going to be part of the taxable sales price. Tips or service charges added to the bill by the seller. A common one is you're out to dinner, you have, this is, way back in the day, pre-COVID, you have a group of 6 or 8 people. There's an automatic service charge or tip added to the bill. That becomes part of the sales price. It becomes part of the taxable amount of the bill. All items required as a condition of the sale. If it's not a separate and optional item, optional means that the customer has the option to obtain that service from a third party, do the service themselves. If you're requiring them to use you, it's not an option to look elsewhere. Might be for installation, it might be for some ongoing service. If you're requiring the customer to purchase something or obtain a service from you as a condition of the sale, that's going to be part of the taxable sales price. And then we kind of talked about it, delivery charges. Delivery charges are included in the taxable sales price. So if the item you're selling is a taxable item and delivery charges are listed on the invoice to get that item to your customer, then delivery charges are subject to tax. Those charges are subject to tax that you're passing on to the customer. We all know that if you hire a third-party shipper and all you're purchasing is a transportation service, that's not a taxable service. Transportation is not a taxable service. However, if you hire a third-party shipper to ship your customer's product to them and you're charging that on the invoice or to your customer as part of that sale, it becomes part of the taxable sales price. So not everything is included in the sales and purchase price. Again, if you're selling an item that's taxable and then you offer a discount or a coupon not reimbursed by a third party, so you're not getting reimbursed by the manufacturer or some other third party for that discount or coupon, you're just offering your customer a customer discount and reducing the sales price. That does reduce the taxable sales price. That is not included in the taxable amount. Other things, if the item's taxable, separately stated interest and financing charges are not subject to tax. I see this a lot, and I think it's because some of the software programs automatically default interest and finance charges as taxable. So make sure on your accounting software that you are unchecking, if it's stated separately on your invoices, interest and financing charges, late payments, that kind of thing, fees for that are not subject to tax. Separately stated taxes legally imposed directly on the purchaser. An example of this would be a contractor may have to purchase a building permit on behalf of their customer, and the building permit is considered a tax. The building permit listed separately on the invoice, even if it's related to a taxable service, it's separately stated it would not be subject to tax. It's not included in the sales price. Credit allowed for tangible personal property taken in trade in the same transaction. Most common example of this is your vehicle trade-in. When you purchase a new vehicle, it's tangible personal property taken in trade. It's in the same transaction. It has to be done at the same time. That will reduce the taxable sales price. So the amount allowed for your trade-in of whatever that is, and this can be taken on video games. It can be, well, back when video games were physical, it can be taken on a variety of things. old equipment that's turned in and customers given credit against their new equipment, that reduces the taxable sales price. Make sure that's listed out so it can be identified on the invoice so that the auditor understands what's going on. Separately stated delivery charges for direct mail. Direct mail is a beast in itself. Direct mail is defined. And so there's separately stated delivery charges for direct mail that would be excluded from the taxable sales price. So a lot of the questions I do get, and even I have to stop myself and think, but a lot of the questions are about the measure of tax. So when people ask, is something taxable, you know, like I talked about how consulting services are generally not a specified taxable service. However, if the consulting service is necessary to complete the sale of a taxable product or service, it's going to be included in the taxable sales price. It's going to be taxable. So you have to be very specific about how you're selling something, what items are included. Are they required as a condition of the sale? Are they listed separately on the invoice, or is it all included in one lump sum on the invoice? So those are things you need to consider and convey when you're asking a question about whether or not something's taxable. Okay, another big issue, and I can't touch on all of the situations this relates to, but this is the location of the sale, which determines the jurisdiction, like who has the right to impose a sales or use tax, and the tax rate. All are reliant on the location of the sale. Often in an audit, whether or not something's subject to tax depends on, did you indicate a ship to address? Where was the item delivered? You have to identify where the sale took place. And it differs depending on what you're selling. And there are exceptions. There's a lot of exceptions. But you just need to learn your business and your types of sales. So don't get overwhelmed with all the exceptions for everything else. So first of all, if you're making sales of tangible personal property, this is whether it's digital goods or physical items. The sale of TPP, the location of the sale occurs where the item is received. And that means where it's received by the customer. So I'm in the business of making widgets. I ship them out. I deliver directly to my customers. I may hire a third-party shipping company to deliver those items. Where the customer receives it is where my third-party shipper delivers it to the customer. So wherever the customer receives it at that point is where the item is received. That's where the sale occurs. So if my customer is located in Illinois, third-party shipper picks up the item from my store in Wisconsin, delivers it to Illinois, that's where the sale takes place. If your customer chooses to pick up or send someone to pick up the item on their behalf, now the item is received where that pickup occurs. So you see the difference when the customer is sending someone, then they're receiving at the point where that person acting on behalf of the customer picks it up. If the customer is the one who pays for the shipping at the point in time when the item is handed over to that shipper, that's the point where the sale occurs. So taxable service is a little more difficult. Taxable service, the location of the sale is where the service occurs or where benefit is first received. So if you are a tow truck company and you are called out to the side of the road to pick up a vehicle or change a tire, the service occurs where that vehicle breaks down. That's where the service occurs. There's another situation where a service might be, I have a watch that doesn't work. I send it to the watchmaker, happens to be in Minnesota. They repair my watch and send it back to me. The benefit is first received when I get that watch back in Wisconsin and put it on. That's where the benefit is first received. So that's a taxable service, but the location of the sale occurs where I receive the benefit of those services. So even though the service occurred in Minnesota, I'm receiving it in Wisconsin. So that's taxable service. So for both sale of tangible personal property and sales of taxable services, there are special exceptions to where location of sale occurs, and it's because of unusual situations in the type of transaction that it is or the business. So leases, licenses, and rentals of tangible personal property, excuse me, those are considered ongoing sales, and they have a different location of sale. Then there's a difference if it's leases, licenses, or rentals of motor vehicles, trailers, semi-trailers, or aircraft, and it depends on if they're transportation or non-transportation equipment. So transportation equipment, if they're traveling across state lines. And then for taxable services, direct mail, we talked about that a little bit, but there's a specific determining of sourcing for direct mail. Of course, could be multi-state, generally is multi-state. Florists, you know how calling in a flower order, you call your local flower shop and then they place the order with the flower shop in another state to do the delivery. So there's a difference on location of sale and how that's sourced. And then same with telecommunication services because of the call originates and likely destination is in 2 different jurisdictions. So a determination has to be made on which jurisdiction has the right to tax that. The third thing that I want to talk about is for real property construction activity, contractors, they have a special situation where materials that they purchase that are used in real property construction activities, contractors owe sales or use tax on the purchase of those materials where they're received, stored, and or installed. So a contractor may be located in, I gotta think of which counties, a non-taxable county, I can't even think off the top of my head, one that doesn't have a county tax. There's only a few left. It keeps dwindling. So they purchased materials, they paid tax to the vendor when they purchased them in that non-taxable county. So the amount of tax they paid is the 5% Wisconsin state tax. But now if they store them in their warehouse in Dane County, now they owe the 0.5% county tax for Dane County because they are storing them. So they paid the 5% Wisconsin state tax to the non-taxable county to the seller when they purchased. Now they take and store them in Dane County, and technically the tax rate in that jurisdiction is 5.5%, but they've already paid the state tax, so they don't need to pay that again. So technically they owe the 0.5% Dane County tax, and then they install them. Say they end up installing them in a non-taxable county. Now that the baseball stadium tax has gone away, we don't have any counties that are higher than a 5.5% sales tax rate for construction activity. So say it's that contractor now installs it in a county that doesn't have county tax, and that contractor already paid the 0.5% Dane County tax. The contractor does not get a refund. Technically, for the purchases of materials, they owe the highest amount of sales tax where it's received, stored, and or installed. So they could wait and pay the tax upon installation and identify what was the location of the highest tax and just pay that tax rate. Or they can pay upon purchase of whatever sales tax rate was at the purchasing location, that jurisdiction. And if in the process of storing or installing additional county tax is owed, then they could pay the additional tax. So real property construction activity, the materials that go into real property are consumed in real property. The contractor installing must pay sales or use tax on the purchase of those materials where it's received, stored, and or installed. So this is a little more difficult for contractors. The other thing about location of sale, jurisdiction, and this is a common one, and think about it as you're going forward with your business or with your clients. When you're purchasing from out of state, check to make sure what tax rate they're charging and where the location of the sale is. So if you have a vendor, say it's New York State, they're located in New York State, they sell products to you, the products are delivered to you in Wisconsin. The location of the sale is Wisconsin. That's where you receive the TPP, the product, right? So you technically owe Wisconsin use tax on the purchase of those items. I know the seller is a New York-based seller. However, New York doesn't have jurisdiction on items received in Wisconsin. So New York is not able to charge sales tax. That sale is out of their jurisdiction. You would owe Wisconsin use tax and you would need to remit Wisconsin use tax to Wisconsin. If you paid tax to New York, you can request a refund from your seller or from the state. Same with any other state. If you are a Wisconsin business and you do the opposite, you're selling to customers out of state, the location of the sale is where the product is received. So it's the location of your customer. Of course, you have to document and substantiate that the sale occurred outside of Wisconsin in order for Wisconsin to understand that it occurred outside their jurisdiction. So you have to put delivery information, location of the delivery in order to substantiate that it occurred outside of Wisconsin. Technically for Wisconsin, if the location occurred outside of Wisconsin, it's just simply not subject to tax in Wisconsin. There's no exemption certificate required. However, I was just talking with a customer this morning, and while that's true for Wisconsin, so if you're audited by Wisconsin, that's what you need to show, you may be subject to tax in that other state. So if it is for manufacturing or for resale, you would want to obtain an exemption certificate so that you are not liable for tax in that other state. Does that make sense? So location of sale determines jurisdiction and tax rate. It helps you understand what documentation you need for the sale to identify which jurisdiction you owe tax to and whether or not it's subject to tax to your local jurisdiction. So I know I didn't go into every situation possible and how it can apply to every situation, but we are over time. And I just want to recap that definitions, what is or is not a sale. Use includes storage and consumption. Don't forget about that. It's just not the actual purchase itself. Who tax is imposed on is identified in the definition of sales and use tax. And then measure of tax, items included or excluded from that taxable sales price. It will help you with a lot of different things and not miss things you should have been taxing. And then location of sale is huge, part of your documentation, part of identifying who you owe tax to, what documentation you need to get from your customers. Next week, I'm excited. I am so tired of 2020. I'm so excited for 2021. Next week, my show is going to be about tax advisory network updates. So my company updates, upcoming guests, I'm getting people booked, programs, webinars, what we got going on, and get you pumped up. I'm just so excited to move on to 2021 that my 2021 is starting in October, fourth quarter of 2020. Forget it, the ball drops September 30th. So join me next week to find out who my upcoming guests are and about programming and training that'll be available. And I'm excited to announce that. To rewatch this episode or to view previous episodes of 10 on Tuesdays, be sure to go to salesandincomeTax.com. Check out my 10 on Tuesdays channel. And I'm going to see you all next week here for the kickoff to 2021. Thanks, everyone.